Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. For today's session of JForex Indicator Explained, we will be looking at one interesting indicator. This is also another version of the stochastic. We have been looking at various stochastic indicators for a better part of this week. So, keeping up with that routine, we will be looking at one derivative of stochastic, which also takes into consideration the RSI. So this indicator is derived using the best part of both these indicators, the stochastic and the RSI. So the name is Stochastic Relative Strength Index, which can be shortened as stochastic RSI. So here, what we essentially do is we take the RSI values and we use the stochastic formula to modify those RSI values in such a way to get the strength of the trend, and at the same time we also look for opportunities where we can go for scalping trades if we have overbought or oversold scenario prevailing in the instrument of our choice. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA. Here, this is the chart of USD CAD, which I will change to Euro USD. There is nothing wrong with the USD CAD. It's just that Euro USD is most popular currency instrument, and most of us prefer to trade on it for another reason also, because we have the lowest spread on the Euro USD if compared to the USD CAD, where the spread is usually higher than 1 pips. Here for the Euro USD you get a half pips or even sometimes lower than half a pip. So that's one advantage of trading with the Euro USD. Apart from that, of course, not to mention the liquidity thing. All right. Now getting back to the indicator section here, I have plotted the stochastic RSI with the default parameter. So if you want to know how you can find this indicator, you can simply do a quick search, or if you want to know where it is listed, all you have to do is go to the momentum indicator list, and there you will find this indicator is here, momentum indicator. All right. So we have it amongst the stochastic indicators. Stochastic fast, stochastic relative strength index. Here it is. And as I said, another option is simply type in here RSI or stochastic RSI and it will appear. Even if you simply type in these first few initial alphabets, here you can then choose from this list. Here it is. All right. Now, coming to its technicalities, as I said, the formula for calculation of this indicator is simple. It simply takes into consideration the high and the low reached by the RSI during the given calculation period, and it simply changes the RSI as the input compared to the applied price, which is usually the closing price for the current candlestick and last few candlesticks, whatever is your calculation period. So instead of taking the applied price, we take the RSI output as the input for this stochastic RSI, and we compare the current period's RSI output to the RSI range, the RSI low, and the RSI high reached during the calculation period. So we compare it and we see where it is compared to its prior range, and that's how we get to know if the momentum is strong, if the momentum is weak, or whether it is bullish or bearish, or simply it is not really going anywhere, and the range is quite timid, quite narrow. So we can get all sort of this information simply looking at the output value of this indicator, the stochastic RSI. This is a bounded indicator. The output is going to vary between 0 on the lowest side to 100 on the highest side. So we have these upper bound and the lower bound limit for both these fast percent K and the fast percent D. And its usual interpretation is pretty much similar to what we were using for a normal stochastic indicator. We consider these extreme values. The low of around 20 or below that is generally marked as oversold, and on the higher side, if we have the output values above 80 or equal to 80 or above 80, then that is generally considered bullish. So from those levels, if we are looking at some sort of retracement, some sort of corrective move, and if we get crossover in the opposite direction, where we get to see the fast percent K crossing below the fast percent D after having spent some time in this overbought territory. Then that can be construed as a sign of possible consolidation, and some sort of retracement move can be expected from those higher levels. And similar thing can also be expected on the lower side when we have fast percent K and fast percent D output below 20, and then as and when this crossover takes place, we have the opportunity, we have the possibility to go long and take the trade for possible move on the higher side, the reversal from these extreme lows. So this sort of trades can also be taken. Otherwise, the classical interpretation is to simply look for change the crossover from below 50 to above 50, which is likely to be indicative of the bullishness or strengthening of the existing bullish trend. And on the opposite spectrum, if we have the output value dipping below 50 from above 50, then that can be construed as the sign of pardon me, construed as a sign of possible move further on the downside, the strengthening of the bearish grip on the underlying instrument. So both these possibilities can be also exploited while using this indicator. Or one advantage of this indicator is that when we have these extreme values reached, that doesn't really mean the turnaround is immediate. It simply means that these overbought or oversold situations, the underlying instrument has reached, but unless there is some substantial move, not substantial, but at least significant enough for these fast percent K and fast percent D to start rising. So we need some move on the higher side. Only after that we get these crossover from lowest side to on higher side to some extent. And if that is not the case, and if we have these extreme values continuing to again trend on the higher side, then these both these outputs are going to remain stagnant closer to these extreme levels, 0 on the lower side and 100 on the higher side. So in that kind of scenario, you will be in position to avoid taking too many false trades. Of course, it is not a foolproof method, but still I think to some extent it is better than compared to the stochastic indicator. So stochastic RSI is to some extent, I think in its use is a little bit better, if not fully better. So that is one advantage of working with the stochastic RSI. Now let us consider what are the customization options available to us for this indicator. So now I am going to consider these various input parameters which can be customized as per our requirement. We generally use this close price as the input mechanism for calculation of the RSI, and based on that RSI output, we then further calculate the fast percent K and fast percent D parameters. So here, if you want to vary this applied price, then you can do that. And depending on what kind of applied price you use, you are going to see different results, varying results for the plotting of these indicator, the RSI, stochastic RSI indicator. So here we are observing significant changes whenever I am changing this applied price mechanism, as this is going to be filtered through to the RSI calculation, and based on that we will have the stochastic RSI. That means this derivative indicator is going to use this close price, which is going to be filtered through the RSI mechanism. So that is like calculating it double. So because of that, the difference is becoming significant. And coming to the calculation period, I think the lower calculation period generally helps in working with the stochastic indicator. So this is also a stochastic indicator, the stochastic RSI. So in that respect, it is likely to work better if the calculation period is not much large or not too short. But if you feel like you can try out some higher calculation periods also. So this is now based on last 24 hours worth of data. So here some stabilization is of course expected, and that's what we are also observing here. Now let us try out another combination. Let us try out uh, 48, which will mean 2 days worth of data for calculation purposes, and some more smoothing, but not much of a change here for this indicator. All right, now I will restore it back to the default of 14, and we will take fast percent %k 5 and change it with, let's say, 10 and 6 combination to see what happens when we are using double the initial default setup. So some smoothing is observed here. The extreme values are being reached less frequently, but at the same time we will of course have to deal with the resultant lag because of this higher calculation period. So this factor has to be kept in mind whenever you are trying to figure out the best possible combination. The responsiveness and the lag, both these factors are there. When you have shorter calculation periods, then the responsiveness is going to be much higher for the indicator. And when you have larger time frame for the calculation, then the lag is going to be there. So you have to see what is your time frame and then work accordingly to figure out the best possible combination. So I am now going to restore it back to 5 to 3 combination. And coming to the type of moving average, if you want a more smoother version of these stochastic RSI, then you can go for these other derivatives of the moving averages. Depending on which kind of moving average you use, you will have slight variations in terms of these crossover. But broadly speaking, the trend is not going to change much. But of course, depending on the type of moving average, you will see the lag or the higher responsiveness. In terms of EMA, of course, it is going to be more responsive compared to the SMA. And for T3, which is a lot more smoother version of the moving average, you will have this smoothing observed in the plotting of the stochastic RSI as well. So you have to see what kind of formation is likely to work best for you, and then accordingly take the trade. All right. Now coming to the output parameters, you can customize these output. Fast percent %k, fast percent %d. All these color combinations are available to you. So if you feel like, you can go for different color combinations. We also get these styling mechanisms for us to tinker with. So suppose if you don't really like a plain straight line, then you can increase or decrease its width. Transparency can also be increased or decreased. So all sorts of options are there to play around and make a chart look more interesting. Levels, we don't really have any level, but if you want to make it easier for you to read into the data, then you can plot the levels like 80, 20, or even 50. So all you have to do is click on this plus symbol. Here you will see this line appearing, and now here it is default at 50, but you can vary it. You can add one line, you can add two lines, you can add three lines, or any number of lines. These are just the level lines, and all you have to do is define the parameters on which it should be plotted, and it will appear on the chart. Coming to the advanced editing options, if you want the output of the indicator to remain constant throughout the current candle period, then all you have to do is opt in for this, or else it will keep moving whatever is the applied price. Depending on that, this output of the indicator is going to keep varying. If you want the calculation period to be highlighted, here you have to check this box, and whatever is the calculation period, it will be highlighted. Since the theme of the chart is black, it is not looking that prominent, but if you observe it on white theme, it will be pretty much prominent. The customization can also be done for further calculation. The instrument can be simply used from the chart. So whenever you vary the instrument, suppose for example I go for other instrument, now that we have this box open, it is not changing. But if you for example want to change to use the JPY or Dow Jones Industrial Average for that matter, all you have to do is change the instrument and you will have the stochastic RSI plotted for the new indicator, new instrument. So you can go for this option, or else you can simply specify on which instrument this indicator should be plotted, and for that instrument this indicator will appear. The same concept also applies to the candle period. You can simply use it from the chart. So whenever you vary the candle period of the instrument of your choice, suppose for example if you go for 15 minutes instead of 1 hour, you will have these indicators, the stochastic RSI plotted as per 15 minutes time frame. So whenever you vary the candle period, it will keep varying. Else you can even hard code these value, even though the chart is of 15 minutes. If you want the calculation input to be of hourly time frame, you can do that as well. So here I am now opting for some editing options, and if I change it to say hourly, now here you can note that even though the chart candle period is of 15-minute time frame, we have the plotting of the stochastic RSI as per the hourly time frame. Now I'm going to restore it back to use from the chart. The spread side, you can use it from the chart, or you can go for ask or bid to be defined separately. There is going to be a slight difference, but not much, as it is simply dependent on the spread difference, the pip size, and for Euro USD, it is going to be negligible. If you want the indicator to be available on all the candle periods, whenever you change the chart, you have to opt in for this, else you have to specify on which time frame the indicator should appear, and only on those two time frames this indicator is going to appear. As I have opted for 15 minutes and 4 hourly, we will have this stochastic RSI plotted. But if I change to say half an hourly or any other candle period, then there won't be any plotting of the stochastic RSI, because we have chosen this option. Okay, now if I want it back, then I have to again change the chart to 15 minutes and then change its setting and restore it back to show indicator on all the candle periods. All right, the base period, let's see if it shows any effect or not. Generally this varies depending on the indicator. Some indicators has this change in their output value depending on the kind of base period used, and some other indicator they doesn't really respond to the changes in the base period. So stochastic is one such indicator where the base period doesn't really matter. So guys, that's it from my side for today's session. If any of you have any query or any idea to share, you can write back to me in the feedback section and I would be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. I have also included the link for this JForex 4 platform, the newly released trading platform, in my bio. So do check it out and let me know how it works out for you. So guys, thank you all for joining in. I'll be back tomorrow with a new indicator, new formation, new setup, new possible uses. So do come back. Thank you all. Goodbye.